Yesterday was a really good day. I ended up getting about 3% returns yesterday, but Robinhood P&L chart is still kind of screwing with me. I closed two of my options positions, one just because I had overexposure and that was a bad entry, as well as just overexposure. I was violating my rules with that third options contract. I was only supposed to have two, but I went ahead and closed one as soon as it broke even, and then I waited for the other to generate a good profit. Once it hit my take profit target, I did. I left one additional options contract open as a hedge because I knew I would be opening a SPY position, a long SPY position, and I didn't want it to lose me money. So my current SPY position is down $40, but my account is still up because as it goes down, as the price goes down, this options contract increases in value. In order for me to start losing money on this, on the overall account, SPY would have to drop to about $645, at which point I would have already closed my SPY position. My SPY contract has a stop loss there for 660. So I shouldn't I should never put myself into a position where my hedge breaks down just because I'm not looking at my screen. So until the price starts turning around, which I expect it to do, I don't know if it'll do it today. We are heading into a 3-day weekend, which is really good for my options position, but it's kind of sketchy for my SPY position because on a 3-day weekend, stocks can gap pretty significantly. Of course, where this is positioned, where SPY is positioned, any gap would probably be welcome. It's about towards the bottom of where it usually will be. Because lately, SPY has been, as you can see here, SPY has been breaking below simple moving average and then bouncing back above it and hitting the top Bollinger Band and then bouncing back down below the simple moving average. What I plan for today is just to watch the price of SPY, and if SPY does hit my stop loss, then I will allow that to happen. I'm going to allow SPY to stop out. SPY will stop out if it hits $60, so another 120, so $160 in loss. But my SPY options position, my credit spread, will be worth $341 versus the 157 that it's worth right now. So in the event SPY falls to 660, I will allow that stop to occur and then I will close my options contract, or depending on the likelihood, I might even leave my options contract open and let it fall a little more. Yesterday, I don't think it should have fell as hard as it fell yesterday. The options open interest kind of implied a lot of irrational behavior. So I'm expecting SPY to go back up. Now, in the event that I'm wrong, that's why I have the hedge. Like and follow for more.